Hey, how's it going? Today I'm going to be talking about certificates of deposit or CDs and what that is. Certificates of deposit (CDs) are financial products offered by banks and credit unions that allowed individuals to invest in money for a fixed period at a fixed interest rate. Perhaps if you do have access to a lot of liquid that you would like. I'm not promoting that, but just like to share example for people out there to understand better. I personally believe there are different vehicles up there. I don't know how secure those CDs are, but either way. So what I'm trying to say is that this is an example, right? So if you have £1,000, right, and you looking for different vehicles where you looking for interest rate, perhaps 15%, 8%, 18%, whatever case might be, 20%, which is might be very hard to find, right? So basically, you're taking your money, you're giving to different organizations. Those organizations gonna use your money. You need to do your own homework to understand what they're gonna do with that money, to perhaps understand better what actually you are doing or the organization is doing with your money. They're gonna buy solar panels, which gonna generate a lot of money for that company, and in return, that company will pay back to you, perhaps more, but it depends on the company. If that company gonna be property developers and they're gonna perhaps build a lot of houses, that's another way of how to think about it. But either way, you need to do your own research to understand what's happening, right? So if they're gonna pay you 5%, 6%, 18%, 17%, as well as you need to understand a lot of factors that comes into play, as well as perhaps your risk tolerance, perhaps credibility of that company, perhaps history of that company, what perhaps you yourself understand very well, what kind of industries you understand, and who you're going to be dealing with, as well as perhaps building a relationship with those companies, starting small, progressing to a bigger projects, how much control you would have over that project, what will be a time frame. So many things to understand. But either way, within this video, I'd like to cover what CDs are. Basically, CDs are form of time deposit, which means that the money is locked in for a specific term, and it is returned. The investor receives a higher interest rate compared to regular savings account. So this is what they're comparing against, right? So it's locked, so you don't have access for a particular time. Would it be 12 months? 24 months? This is what it says, right? So it's 24 months, right? So it's locked for 24 months. You can access that money, but it compares against savings account, depending on your savings account. That would be 0.02 interest rate, 0.2 or 2% interest rate, or what depend. You need to consider all the options available as well as risk factors, right? So if you're comparing with the different savings accounts, perhaps I'm not supporting and I'm not recommending anything. I'm just looking there to find some information for entertainment and education purposes only. You need to understand your own personal circumstances, and I'm not your financial advisor. Let's take a look at some of the key features. That would be a fixed term. So these have predominant maturity date. This can range from few months to several years, with longer term CDs typically offering higher interest rates. Fixed interest rates. The interest rates on the CDs is fixed for the entire term. This means your money will earn a consistent rate of interest regardless of changes in the market of interest rates. If the market fluctuates at the time, right? A low risk. I don't know. I don't know about that. There's a risk involved with everything. When it says low risk, right? CDs are generally considered a low risk investment because of they're typically insured by FDIC, Federal Deposit Insurance Corporation, for banks of NCUA, National Credit Union Administration, for credit unions up to a certain limit. This instance ensures that your principal is safe even if the institution goes out of business. That might be US. So for people out there, that might be US. But there are so many different vehicles. If anything, I would like to expand your own understanding of how your money can work for you, right? That might be US markets, not necessarily case markets, not necessarily Europe. They would have different vehicles as well. But once you start saving money, since I covered a lot of information on the weekend, that would be just one of those vehicles available up there. But again, you need to understand all the risk factors as well as everything what that is. So a company, you need to do your own due diligence. Lack of liquidity. Once you invest in CDs, your money is locked in until the maturity date. If you need to withdraw your funds before CD matures, you may incur penalties and you will likely receive less interest. So there's options. So perhaps you would like to exercise those options, but you need to read the contract if you would have those options up there available. Sometimes I don't know again what kind of contract you would find yourself in. Interest payment options. Interest can CDs be paid in different ways. Some CDs pay interest monthly, while others may pay in quarterly or annually. You can also choose to have the interest added to the principal or paid to you separately. Sellable CDs. Some banks offer sellable CDs, which give them the option to recall the CDs before its maturity date. This can affect your expected return, and sellable CDs often come with slightly higher interest rates to compensate for the uncertainty. Again, that's another vehicle up there. Just so you understand, so you need to read the contract, right? Everyone's scared, so all the time everyone's scared, right? So I don't know how people get into the or beginning investing in different ways just because it's everything's new. Everything's new, everyone needs to understand it, but or if anything, there are different options. I would like to acknowledge some of those so you would begin understanding or bring your attention to ways of beginning your money working for you, investing in different vehicles, one of those vehicles being CDs. Jumbo CDs. These are CDs with very high minimum deposit requirements, often exceeding $1,000. They usually offer higher interest rates than regular CDs. Broker CDs. These are CDs purchased through brokers firms rather than directly from the bank. They often a wide variety of terms and issuers but they may have slightly higher fees. But yeah, the fee would be administration fee that it would incur to compensate for a broker. So, but again, so if depending on when you're going shopping or what kind of contracts you might be interested in, well, perhaps there's a lot of demand, depending on the territory that you would find yourself in for perhaps different vehicles. So if even right now, I'll give you an example. I don't know if it's an option there. Perhaps different regions like Africa as a region suffering from a lot of electricity shortages, right? So this region is suffering from this problem. So there's a demand for that. So perhaps this demand can be fulfilled by different companies up there, but those companies would like to raise money from individuals, perhaps not necessarily of their own capital, right? Or different projects might be interested in raising a lot of capital to build those projects that would offer you returns on investment. So perhaps that would be options there. So they could be how we're gonna structure this contract. They can structure STDs. They can structure I don't know different ways, right? But this is perhaps that would be a good example to understand how they're looking to employ your money and how your money potentially can make more money, right? So they putting into good use that could benefit a large group of people. Your money can help people. In return, they can people by saying thanks can increase the amount of money that you have. But again, you need to taking a look at understanding what the team is working on this project, how likely you will receive back your money. So a lot of things to take into consideration, right? People out there if you're interested in learning more, I have published a book. Within this book, Project Fitflow, I'm sharing a lot of information, everything with regards to business. You can find all of this information. I have myself been in the industry for many, many years. as well as I have all qualifications. Since I don't know some of the backgrounds of the people, but I have been there, done it. I have done it professionally, as well as I'm looking to share a lot of information. Since I have read all the top books that I was able to find myself, and that was one of the reasons why I decided to publish this book, since I couldn't find some information out there, which I personally believe was very important for people to understand how to structure their routines, how to work out, and what would be important for these people. It would be very technical information, so it's a very technical book. Some people will prefer to very light material that would help them to perhaps how they feel, or perhaps work on motivation. If anything, this book is very technical, so you will understand what is actually happening when you're lifting weights, how working out, and everything what you're doing, right? So you can find this in the description below, as well as topic that has it. CDs can be a good choice for people who want to earn. It says guaranteed, but nothing's guaranteed in life. Taxes and I don't know, death or something like that. That's guaranteed, not necessarily guaranteed. There is risk involved in everything. I'm not promoting. I'm not recommending anything. I need to keep saying that for some reason. Return on their savings while protecting their principal. However, they may not be the best option if you need easy access to your money or want to take advantage of potential high returns from other investments like stocks and bonds. Before investing in CDs, it's essential to compare the terms and interest rates offered by different institutions to find the best options for your financial goals. The due diligence, right? So if you currently looking to where to begin, right? So depending, some people might be up there. Look to you try to start with £200, dollars. Perhaps you can begin with small sum and try different vehicles. So that perhaps the way how to think of that could be a strategy. See what works, what doesn't work, how fast, have a feel for it, and keep stacking those. And over time, slowly, compound interest might do its magic, right? Thanks for watching. I'll see you in the next one.